Michael Clarfeld, one stock in your portfolio is Anheuser-Busch InBev. Now, Bud has underperformed the S&P over the past year and 5 years. So is the problem that Americans are drinking more wine than beer now? Is that the problem?
Yeah, it's a good question. I think what we like about Budweiser so much and what we really focused on is the fact that they're the dominant beer player in each of the markets they're in. So it's actually not just the U.S., it's also Brazil, Mexico, and the rest of Latin America. And what's so powerful about the business is that it's interesting, you've talked about time frames like 1 and 3 years or 5 years, which are certainly relevant. One of the things we like about beer so much is that people have been drinking beer for thousands of years, and we think people will be drinking beer 10, 20, 30 years from now. So in our investment approach, we're looking for businesses where we can compound returns over the long term and where we think that the market position or the company's health is stable for a long period of time. We have a lot of conviction that beer will continue to be an important part of people's diet or spending, and so we like the idea that it's a dominant business in a market that's going to be around for so long.
And people will keep fighting for a long time. Another stock in your portfolio is UTX, United Technologies.
Yes.
They're in the military business, the defense business, the aerospace business, and this stock has really taken off.
Yeah, so UTX we've done well with. We like the company. What we like about the company is, again, we look for businesses that are in industries or markets where you can compound returns predictably over the long term. And what we like about United Technologies, they're big in aerospace would be one industry, another one would be the elevator business. Neither of which may sound particularly interesting, but they're both really strong businesses because they have a strong maintenance aspect. In other words, when you sell an elevator, you have to maintain an elevator on a regular basis over time. So every 6 months, the repair guy comes in, and that sort of predictable cash flows is something we really like and things we look for in all of our companies.
And then finally, Oracle is another stock that's in your fund. Now, Oracle missed on the top line earlier this month. Is Larry Ellison getting beaten to the punch by all these new cloud tech companies that are coming out?
No, we don't think that that's the case at all. Again, what we look for is companies where we can predictably compound returns over time. What we like about Oracle is so much of its business comes from recurring maintenance revenues. So if you're a company, you use an Oracle database, and that Oracle database is holding some of the most valuable data the company has. It's very sort of critically important. Because of that, you're always going to maintain the service agreement with Oracle. It's a very high margin and very predictable cash flow that we think they can count on for years to come.
Thanks a lot, Michael.
Thank you.
Thank you for watching The Street.